So welcome back, everybody. This is the September 2024 edition of Lawyers Happy Hour. I am Daya Naif of The Success Partner. I am your host and sponsor, and they call me the law firm co-pilot. So I do a blend of coaching and consulting for small law firms nationwide. Even though this group is based in the DC area, we do have guests from all over the world. Tonight, I have Nicole Wright with me, and she is going to be sharing some great insights on profitability for small law firms. And without further ado, I'm going to let her introduce herself and take it away.
Yes. Thank you, Dad. My name is Nicole Wright, and I am the owner of Wright Accounting Solutions. My business has been around for 9 years now. I actually started out as a side hustle back in 2015. I have 20 years career experience within the finance and accounting industry, working under a government contractor. I also have my bachelor's degree and my MBA. And I would like to say my accounting career actually started very, very early with my mother at the age of 11, sitting at the dining room table with her while she did the taxes for everyone in the neighborhood and family. And my first job was at age 15 in accounts payable for an airline. So my experience is pretty extensive. During that time, I was always interested in accounting, took so many classes, volunteered my services just so I can learn, build on top of my experiences. The company that I was with, I started there in 2003 and just excelled from various different positions as I progressed year after year. During COVID is when I made the decision to say that I was going to take Wright Accounting Solutions full time. I made that leap in December of last year, and I'm not looking back. So what I'm going to talk about today is exactly how I was able to make that possible. And that is definitely putting your profits first. So that's what tonight's discussion is going to be about. The law firms are a little bit different for me, so I would love to hear the feedback from different law firms to see how they're actually managing their cash flow. It's typically the same across the board, but I know the cash flow can be different as well. I'm going to share my screen. Okay, so again, my career going full time into this journey of entrepreneurship started back in COVID. That's when I decided to invest in myself, take my business full time. And I was introduced to the book Profit First. And from that book, I believe I read it 3 times now, and I still refer back to it. I have like post-it notes all through it. So I recommend that book for all entrepreneurs in whatever industry that you're in. Because that does help you take control of your profits. It makes you look at the analogy of GAAP differently. We should not be following that as we are managing the cash flow within our business. And when we're, especially in the scaling season, we want to make sure that we're looking at the full picture and not just certain areas of our business. So this presentation is going to be about profit right, profit now, and taking control of your business through prioritizing your profits. I'm going to go to the agenda. So the pain points of some of the business owners that I've encountered for the past few years is definitely the cash flow concerns, reinvestment of your priorities. That goes back to like if a business owner has an influx of cash, what do you want to do with it? Most will jump and say, oh, I'm going to purchase a vehicle, or I'm going to go and buy property before even thinking about the long picture of your business. Lack of financial planning and balancing your personal and your business needs. And then a lot of business owners are facing the fear of failure as well. We see the economy that we're in, so there's a lot of small business owners that could really benefit from financial planning and understanding their tax obligations. Any questions from there?
But I was laughing. I used to work in construction, and so when anybody had any extra money, they would go buy a truck, and it's like, wait a minute,
Yes, I yes, I see that all the time. And so I'll make a comment about that after I go through this. So the formula that we've been taught since I would say probably college, like if you took accounting 101, we all know sales minus expenses equals profit. When you think about that, it's like, okay, my income is coming in. Now I have to pay all these expenses without even thinking about, wait a minute, I have to pay myself first. That's the whole reason why we went into business, is so we can profit from our business. So how can we profit from our business? So there is a different formula that we can follow. Now, it's definitely a mindset thing. So I always tell people you have to ease into it. Don't jump into it. Because if you jump into it, it's going to fail. But 28 million small businesses in the US, and 22 are at even when you're using this formula. But when you change that formula, it's it changes your whole entire life. I'm telling you, I'm definitely a witness of that. Accounting alone focuses on the numbers, but it does ignore our human behavior around numbers. So it goes back to what I said. A business would get an influx of cash, and the first thing they think of is, oh, I want to go and purchase this vehicle. The vehicle could be like $60,000, but you're not even thinking about your payroll or paying yourself. So I always want business owners to think about a succession plan before you make these large purchases. I understand when it comes to like a tax aspect of it, but also think about the longevity of your business. Where do you want your business to go? How do you want it to grow? So before making these large purchases, always have some type of plan in place to make sure that you are following the goals of your business. And again, the human behavior, it's when we see, how can I explain this? When we have a large influx of cash, like I said, the first thing we want to do is get more. We always want to say, oh, I have X amount of dollars in my bank account. I can get this software. I can buy this class. I can go to this coach. I can do this. I can do that. We don't want to do that. We always want to have a plan for our cash. Okay. So setting up your different accounts, I always recommend starting out in your business, you should have 4 different accounts. Okay. That first account should be your income account. That income account is going to be a checking account where you're going to receive all your deposits. All your customer deposits will come in. And then from that account, you will pick a particular day, let's say the 10th of the month. You have a large amount of cash that you had come in. I know most law firms, you collect retainers, right? So those retainers for you will be a little bit different because those retainers will have to go into like an escrow account. But let's just say once you reallocate those funds after that time has been used, you want to now set a time in the month, usually the 10th or the 25th, and you want to allocate that money to 3 other accounts. Those 3 other accounts will be your profit account. So that profit account will be your savings. It will act as a bonus account. That bonus account will be paid out to you every quarter in increments of 50%. And that's like a bonus to say, oh, look, I'm a business owner. I've made profit. Okay, so you're out of sight, out of mind as well. So you want to make sure that that second account, that profit account, is a savings account that has a high interest earnings on it for the interest rate. And then the second account is an account that we all don't like, but we have to do it because we have to pay Uncle Sam. It's your tax account. That tax account, you want to make sure that you're allocating at least 50%. I mean, I'm sorry, not 50%, 15%. If you cannot do 15%, start small on all these accounts. Start small, like your profit account, start at 5%. The tax account, start at 5% or 10%. I always say these 2 accounts should be high interest bearing savings accounts because while that money is sitting, you want it to also make money. Okay. And then your last account, the 4th account should be your OPEX account. That OPEX account should get majority of the percentages, and then paying yourself. I'm sorry. So you pay yourself after the tax. I'm sorry, I had that backwards. Because that your four business accounts will be your income, profit, tax, and OPEX. And then your personal account will be the account that you're paying yourself to. So you always want to pay yourself between, I would say, depending on the cash flow of your business, start at 30% to 45%. Okay, start around that range. And then, like I said, if you set time on your calendar on the 10th and 25th of the month, and you go based on the amount in your income account and you use those allocations, you will start to gradually see that your money is compounding every day within the savings account, and also increasing. You're starting to collect like a reserve in your OPEX account. So when it comes to your OPEX account, I say your goal should always be to build up a reserve of 3 months worth of expenses. Okay. I know that was a lot. So is there any questions on that?
No, that was a great, I also read the book, but it's been a few years. And so I remember setting all this up and then sort of falling off the wagon with it. So it's bringing it back into fresh memory, and why would I do this? So yes, thanks.
Yes, yes. And what I find, one of the number one reasons why some of us fall off is because we can't stick with those percentages. Like either we start too high and we're not sticking with it, or we're doing allocations every day or every other day or twice a month. And maybe, if your flow of cash is not coming in as consistent, then just do it once a month. And it's okay to skip a month when cash flow is down. So you always want to adjust your expenses to fit your remaining budget. So that's another thing. So that's why we do fall behind, because we're thinking, well, I need this, I need that. You really don't. So I always recommend, I know I'm going a little bit ahead, but I recommend doing quarterly expense analysis to see exactly where's all your money going. I just did one for myself, and I was able to increase my bottom line almost double, because I let go of some of the things that was no longer working for my business. So we always find ourselves repivoting in our businesses where certain software doesn't work for us anymore. Certain coaching program might have grown coaching programs, just different expenses that just does not fit our businesses anymore. And it's okay to say no. So no is a complete sentence. Okay. So again, just understanding the profit first system. Uh, like I said, I still recommend going back and reading the book, but this system is set up to help you simplify financial management, accountability, offering positive reinforcement. Like I said, when your accounts get to a certain amount and you realize you cannot do those allocations, a lot of us like to do bank balance bookkeeping. Those accounts is going to help you and guide you to understanding, no, I can afford this brand photography that's $5,000. I'm going to have to wait. Or if this is something you really want to have done for your business, then set up another savings account and allocate like 2 to 5% and start building for that expense that you really need for your business. So I'm using an example for myself. So there's brand photography that I want to do, but I'm like, I'm not going to touch my OPEX funds for that. I'm going to actually save for that. So that's a goal for me that I have set for my business. I do not want to touch my OPEX account or my payroll account, because those are my regular operating expenses. So again, as I said, this is psychological principles. It helps small business owners overcome their financial challenges. It creates success and resilient businesses. So I just spoke about this, bank balance accounting. So we know that we all should be following our profit and loss, our cash flow and balance sheets. But honestly, once you get those reports, it's kind of too late. So you always want to be checking your bank balance constantly. And so the best way to do that is setting up these accounts so you're not taking away from your regular normal fixed expenses or those variable expenses that come across every month. You will know exactly what's in your account and what you can afford. Okay, so the Parkinson Law. So the Parkinson Law is powerful. It's when you take your profit first and you're forced to grow your business off the remainder. So again, it's just saying that after I took my profits from the profit account, the tax account, and I paid myself, whatever's left, it goes to your operating expense account. From that operating expense account, it lets you know what you can afford and what you cannot afford. And if it is a big expense that you really need for your business, that just says now you need to set a new goal, open up a new savings account, and start saving for it. Okay, so in the past, profit was something that was left over. I don't know if many of you have noticed that at the end of the year, when we start looking at our financials to start preparing for the tax season, and we see that bottom line and it looks nice, we're like, where did all that money go? So now you don't have to worry about where all that money went. If you're following these steps and open up these different accounts, you'll be able to visually see exactly where your money went and what you saved from that profit. So that's the best thing about this program. Well, this program and the structure of the book, if you read it. So now, for all of us that are always checking our accounts, now it becomes more effective when you implement profit first. So again, I just went through this. So this is going into more detail. So it's just saying to open up separate accounts for your business. I said, open up your profit. You already have your owner's pay, which is your separate account, your tax account, and then your OPEX. And then that way it's easy for you to allocate. Like I said, if you set time aside twice a month, once a month or twice a month, you'll be able to start seeing the growth of you putting this process and implement this process within your business. And then determining your target allocations. This is, I say start small. If you go back and read the book, it gives you your target allocations based upon your top revenue. But sometimes that top revenue is too high. So you would need to set a goal to start small and gradually grow into that target. So I always say, start your profit from 2% to 5%, and then your taxes should be like 5 to 15%. And that really determines on what your cash flow looks like to determine how much you should be allocating. Okay. And then paying yourself, always start from like 30% to 45%. All right, so this is just explains the allocation. So let's say your revenue was 10,000. So from that, you're going to allocate 10% of that to your profit, 50% of that to your your compensation, your owner's compensation, and then you're going to allocate about 5% of this to your tax allocation. This is, I'm sorry, this is wrong. 20% of that is going to your tax allocation. Sorry. And then the remaining will go to your OPEX. So it's telling you only have $2,000 to spend in your business for operating expenses. So that means, okay, we have to tighten our ship. We have to become lean and not constantly spend on things that we do not need in our business. All right. So to manage your cash flow effectively, I always recommend setting up a cash flow forecast for 6 weeks. Monitor that. And you can also use that spreadsheet to also monitor your allocations. And then you'll be able to adjust your allocations as needed and being able to stay disciplined with your spending. Okay. So ways that you can use this system for growth is with your profits, you can reinvest your profits back into your business. Like I said, you set goals and you say, okay, I want to expand in my business. That's like if you want to hire, you'll know when you're ready to hire. I use this system to build up my payroll reserve. And I knew once I got to a certain threshold, I was like, okay, now I'm ready to hire. And then you can expand your product and service offerings. And then you can invest in the marketing and sales efforts. So it goes to like your brand photography, Google ads, TV ads, or if you want to do like some PR, you'll be able to do that as long as you're planning that within your cash flow. Okay, so challenges. So we just talked about some of the challenges, and that is the cash flow fluctuations, adjusting to your new spending habits, and resistance from some of your employees. Now, I've actually onboarded a couple clients where when we looked at the cash flow, when we started implementing the systems, put them in place, we realized that the payroll was too heavy. And so we had to decide who to let go. It was hard, it was difficult, it was challenging, but that business is still rising today and they have been able to increase their profits by 30%. And that is their net profit. So they were actually not doing good and it was their payroll. The payroll was way too heavy. So those are some of the challenges that you will see with Profit First. It'll basically bring out your weaknesses of your business, and then you'll be able to see those weaknesses, set goals, and then overcome those weaknesses. Okay. And then just tracking your progress with Profit First. I recommend using like a spreadsheet, Excel. If you have a good accounting system, use QuickBooks. I'm a QuickBooks Provisor. And then also for personal, if it's just you or your solo company, there's an app called Minarch. I like to see the full picture of my business and my personal, so I'm able to set goals and a budget and be able to see a full picture of the growth of my profits, my taxes, and any of my investment accounts. And I just went through it. So yes, QuickBooks, your bank accounts, Minarch app, Google Sheets. Now with the bank accounts, I know that some companies like Truist, they give you a little of a hard time, but if you go and bank with a community bank, your community bank will be more lenient with allowing you to open up these multiple accounts. QuickBooks also has a checking account that is owned by Green Dot, that's managed by Green Dot. They also have accounts and their interest rate right now is like 5%. But you're able to open up different envelopes. I've been using it for about 2 years and it's been very helpful. So I actually have 3 different banks that I use because like I said, out of sight, out of mind. So once you start allocating, you don't want to see it. It just helps you build your funds faster when you don't see it. Okay, so conclusion. So by implementing the Profit First mindset, you're able to tailor strategies, businesses can enhance profitability, you'll minimize your financial stress, and you can achieve long-term success. So with that, I always recommend working with a financial specialist, someone that can specialize in strategies, not just closing your books and filing your taxes. You really need to work with someone who is taking everything into account with what you have going on, someone that can be your confidant and be able to point out different weaknesses with you and hold you accountable to your finances, and that's able to have a forward thinking mindset to help you grow your business and help you achieve sustainability. All right, so that's the end of my presentation. So thank you so much for listening to me. I know it was probably a lot to digest, but you know, in order to achieve longevity within your business, it's important that we implement systems that we can follow our cash flow and manage it wisely.
Yeah, that was a wonderful presentation and very succinct and followed the path. One thing you did mention about like transferring from the IOLTA account into the operating account. One question I get is for people who charge flat rate. And what they come up with internally is to do a drawdown schedule on the flat rate. So if you were to do a an estate plan or something like that, or if you have a criminal client and you've quoted them, $10,000, like have an internal drawdown schedule. And then that way you're not wondering where the money is because it's just sitting in the IOLTA account and you don't know when to pull it over. So that's one thing I just wanted to add that I've seen small law firms do.
Yes, definitely, definitely. Kara, did you have any questions?
I did not. I did learn some new things. Like I hadn't thought about making my profit account into a high yield savings account. I have one personally, but not for my business. So that was good. I haven't read the book, so I probably don't know a lot of the principles, but I thought it was pretty informative. So I appreciate it.
Welcome, welcome. So glad it was informative for you. Yes.
Thank you. And I liked how you put the range about like where to start, like in 30 to 40%. That's another question I get is like, how much should I be paying myself?
Yeah.
And it usually comes around that 30% mark.
Right. And I always say, yeah, if you start small, right? And then as you start to gradually grow in your revenues and you're starting to see, oh, I'm really making money, then you can gradually increase. And I wouldn't increase it until like the next quarter. So try to stick with those allocations for the first quarter. And then the next quarter, just go up slightly, like maybe an additional 2%, and keep doing that until you hit your target allocations for your business. So it can
That
take
makes
you up
sense.
to a year to reach those
Yeah,
targets.
the gradual 2%, so you don't really realize it, but it's sort of like a
Mhm.
raise, cost of living raise every quarter.
Right. I always say slow and steady wins the race. So do it slowly because if you jump in, it's just not sustainable at all. At
Mm,
all.
kind of like a
Yeah.
diet.
Exactly. Exactly. Yes. Yes.
Wonderful. Well, thank you everybody again for joining us. Most of us are going to, it looks like we're going to have some replay because we had a large registration number and not too many people came to the live broadcast, but that is totally okay. And Kira and Nicole, since you're on here, I certainly hope to see you in person at the University Club next Wednesday evening. So we're going to have a real life Lawyers Happy Hour in DC. So hope to see y'all both there.
All right. Thank you so much for having me.
All
Thanks,
right, y'all.
everyone.
Okay, y'all take care.
Thank you. Bye.